Trading, checking in. Sorry I didn't get out a video yesterday. Super busy. I'm going to cover a lot of topics, so hopefully you guys can just bear with me here. I'll be bouncing all over the place. My thoughts on what's going to happen next week in the market. Obviously, I'm a technical trader, so I kind of wait for the evidence. Monday and Tuesday, I think, are going to be huge days, pivotal days. I think they're going to dictate the direction of the market over the next month, even maybe a couple months. At least it's going to dictate the next leg. I think that will be evidenced by the action on Monday or Tuesday, because we're coming to a point where we're kind of building up some energy here. And I have some thoughts on what to look for directional changes in the market. I know everybody on, you look on CNBC and we can kind of pull up some news and you'll see, the market's going to, this is worse than 1929 and this is, the beginning of the Great Depression, and the bear spread is super high right now, bear versus bulls. It's starting to get up in the 60%. So a lot of negativity out there, and as a trader, if it becomes too negative, I become positive. If it becomes too complacent and positive, I become negative. I like the action that I saw in the volatility index, but it also shows a little bit of complacency. I don't think the market has had I don't think there's capitulation in the market. I think it happened so fast, the pullback, that a lot of it was algorithmic trading. A lot of it was big money managers, and knowing that we probably did hit the top here technically, and that what was happening was enough to create a huge, and I should call it a white swan event, not a black swan event, because we kind of knew, it was like a slow hurricane coming over on Florida here, and you could see, we can watch hurricanes come over. It's almost like analogous to that. We could see this coming over. Some people took it seriously, some people didn't. I took it probably a little too seriously. But in any case, let's jump into the numbers, and I'm going to go into some stocks that I think once we get this quote unquote reset on the economy, which I think is what's going to happen here, you're going to see some stuff. You're going to see some stuff rebound and other stuff languish. We've already seen it in small caps. We've literally just completely decimated the small caps. So anywhere there was a little bit of leverage or a little bit of debt, and the not so good ratio to equity, you're seeing a cleansing of the market. You're seeing a cleansing across the board. It's almost like this global cleansing, right? Like we stopped producing in the factories. It's now like a refresh for the environment. It sounds crazy, but this could be like a huge pivotal time in the world. I mean, on all different levels. I mean, when we reopen things, does it change the way we work? The way we interact socially? Does it change the way businesses are the focus of their direction moving forward? So let's get into the numbers, and then I'll make another video on some other stuff because I won't be able to fit it in all these videos. We're in the lower half, the middle area of the consolidation of the Dow Jones. Let's go to the weak dog right here first. This area of consolidation was a very short period, so I don't think we'll last. We're either going to pop up into this area, or we're heading down to this area. This area is solid. It's 3 years of consolidation. This isn't really a consolidation area, because you think about it, this is the area of consolidation, a year and a half to the break point. So we're probably not going to languish here too long if we do get up there, unless we start a sideways pattern, but that's going to depend on the news. We need to be ready for either move, right? So if we do break down, what are we going to do? What's the game plan? If we do push up higher here, what's the game plan? That's how we're going to, we're going to do the IFTTT. We're going to do the if this, then that. Not try to push which way the market's going to go. We're going to let the market do what it wants to do. And I think you're going to see the QQQ break if we go down lower. That's going to be the general. The general has to fall before the war is over. So the Amazons, the Microsofts will crack below their moving averages, and that will give you the final washout. But let's not jump to conclusions here. Let's wait for the technical evidence to unfold. As we zoom in, you can see we haven't entered this consolidation area. This is a strong area. The small caps have already entered that area. The big caps have not. Obviously, you've seen a rotation in money. And usually what happens is rotate out if the market gets to a capitulation. Not a technical capitulation. This is a technical capitulation. Kind of more of that gut feeling like, all right, I just give up. Like, this is horrible. This is terrible. And that's going to happen in this zone here. And then you can see as we zoom in here, some of the different areas that we look for. We can't get back up into the momentum channel. Very difficult. We're kind of languishing back on the low pivot line. We have some multiple moving averages here. I used the daily EMA, but an exponential moving average is just taken further back. I'm not sure it's fair to go further back on this type of a technical move and use an exponential. So we're using simple moving averages. We're using, here's a 21-day simple. So you can see a combination of a 21-day simple and a 30-day. And I used a 30-day because that's been the amount of days on the sell-off. I wanted to kind of quantify, not go too far back. I wanted to see where we're at within the range of what's happened here. So now you can see if you use the 21 simple and the 30-day DEMA, that's your closing exponential moving average on your daily, you're going to see here, this is a super important area. Look, we got support and we have resistance at this angle. Which way are we going to break? That's the Dow Jones Industrial Average. And I'm just going to make some broader comments. I mean, can we do a 1929 crash? I think the personality of the stock market participants are different here across the board. I think the Fed is a different animal here. Obviously, the structure of the market was different in 1929. We didn't have the things that we have now. It's a double-edged sword. The Fed has probably created a lot of the problems, but they're also going to probably keep this from getting completely unraveled. They may cause it on some level, but like I said, the psychology is a little bit different here. We're all looking at the same things technically. You're going to see support at lower areas of the market. My opinion, too, is also that the market and the economy here are playing a little game of cat and mouse. And I believe, this is my personal opinion, that we cannot continue to keep the economy closed for much longer. I think you're going to see geographical territories open up sooner than others. Obviously, New York has a peak that's going to happen before areas like Florida, where I live. These people have to go back to work, and I think they'll do it at the risk of getting sick, and they're just going to throw their hands up and say, we have to go back, because otherwise the economy will just simply implode. That will probably cause a second wave of infections and a whole nother issue. At some point, the market's just going to say it doesn't matter anymore. And I'm going to go into that later on another video, because there's a lot of moving parts there, a lot of moving pieces, but we're going to have a list of stocks I think will flourish in an environment like that if we do get a shift here and a change. So oil markets, obviously we talked about USO on Friday in the pre-market. Bear with my crazy charts here. Big move from the bottom, huge move. I said you probably wouldn't, if you got above 595 and you got some carry through, 578 I think was our number, you can get up to the 630 and change area. But regardless of the move, we thought it was going to be a little bit of a head fake. We're actually looking for USO to break down on the Fibonacci to the 360s, I think it was. And that's where I think you'll get the flush and the wipe out of everything and want to jump back in. If that doesn't happen, then we're going to have to wait for some type of consolidation channel in here and decide whether we want to just start to nibble on oil longer term. It's going to be a bad day Monday, apparently. Saudi Arabia and Russia are still at it, and they had to push back a meeting from, I believe it was Monday, which they were scheduled to meet, and push it back to Thursday. The CNBC headline says oil will crater on Monday morning. I don't know that it craters, but it's certainly going to give back a good portion of this move that it made, which is the biggest move in one-day history, this candle right here. And we closed towards the bottom or the middle half of the candle. So, and then we pushed up. That's your Friday move. But that move on Thursday was massive. Then you got a little bit of an extension on Friday. So it didn't get up to the other moving averages. We look at like the 20 and the 30 on the simple if we're going to keep those time frames here. So oil will kind of neutral on, but let's see how it pulls back. I'd like to see a flush under there, and that's when I'd be a buyer, just for strategy purposes there. And then let's look at a couple other things here too. We talked about gold. Everybody's saying gold is going to do great here. Here's our Fibonacci on gold. The problem with gold is that the volume is not there. It's just declining. So if we're going to see gold, we did the retrace here. We bounced back up on the Fib numbers. We're holding the Fibonacci on the 50 from the rebound. We went from the rebound top to the bottom, and now we're kind of just barely getting above the momentum trend line, but the volume's just not there. The volume's not there to get a leg up, especially if we get redemptions in the market across the board and you start getting liquidations. I think you'll probably go retest this level here, and we can extend that to the right, and you'll see, and then remove the Fibonacci. And then you'll see kind of what we're looking at in this area here, right, the VWAP. So if you pull back, maybe these are the areas. If you're trying to, scalp, then you want to go at the lower areas of the moving averages. Let's see if we break the daily on here. So far, higher low, higher high, higher low, higher high, higher low, higher high. We haven't broken the daily, but we just don't have enough momentum here and volume to start making massive moves, loading up on JNUG and stuff like that. So I'm going to pause here, guys, and then we'll regroup, and I'll start banging out some more videos with particular stocks, some market news that I'm looking at, and some strategies that we're going to be looking at for Monday and Tuesday.